in accounting, you are going to work with a statement of position, like normally balance sheet, or now they call it a position, statement of financial position. And then after that, you're going to work with an income statement, and then you're also gonna do a equity statement, and you're also gonna do the statement whereby you check the credit and the debit if they when you balance them, like also the journal. So the most important thing in accounting is you have to be able to analyze. If you understand what I'm teaching you today, or if everything that you once did is concept, then in accounting you will never have a problem at all when you're doing accounting. In anything that you are going to do, as long as you understand this, because this is the basics, this is everything. So you know that, okay, when you're working with the equation, let me just say equation of an accounting. We have assets equals to equity plus liability. The equity that will start with the liability, let me just write liability. So here, assets are everything that is owned by the company. That's an asset. Everything that is owned by the company, it can be equipment that belongs to the company or an entity, is called an asset. So which means what you own is called an asset. It can be a computer, it can be a house, a property, it can be anything, as long as your entity or your company is owned, that we classify them as an asset. So after that, when we talk about equity, it comes with like a shareholder. So which means the equity is the claim of the business, your claim of the business. So after that, when you have profit, everything, or when you have any interest, that's the interest of the owners in the business, the interest that you get in a company. So here in accounting, remember, I'm not gonna talk based on your own company. You can also buy shares in a company, in a big company. So when you buy a share, it's like you are also owner of that company, because you are a kind of like a shareholder. So when you buy the shares, the interest, the money that you donated in the company or you contributed will fall under equity.
Okay.
Then when it comes to liability, liability in general is all about the credit, the
Again.
loan that you are owing, the company is owing, is called like liability, it's under liability. So now when you have known that, there are many things that we have to think of. In assets, let me erase this. I hope this equation, assets equals to equity plus liability. I will just use E and L. So in assets, we have things like vehicles, and okay, let me just write, okay, assets. Where these are examples, no? I will just say easy. These are examples of assets. In assets, we have vehicles,
Yeah, vehicles.
and then we also have equipment. Vehicles, equipment. This, when you are reading, they will give you a scenario. And when you read, when you see that, okay, there is a vehicle for this, remember that that amount, it falls under asset. And then we also have equipment. Equipment can be a computer. What's wrong with my let's say equipment, you can just take note of that equipment. It can be a computer, and we also have a furniture. It falls under furniture, it falls under assets, eh?
Okay.
Furniture. We also have machinery. We also have a land or building. and all buildings or buildings. We also have a bank. I will just say bank or cash. These are things that falls under what under assets. So now
Asset.
we have you must remember in assets we have two types of assets. We have intangible assets and tangible assets. Intangible assets. I did account long time ago, but I not easy to forget because maybe because I'm a mathematician.
Mm.
Intangible. So when we talk about hello,
You have a long-term asset and a short-term asset.
intangible assets and tangible assets.
Yeah.
Ne? You know, remember what is the meaning of these two, intangible and tangible assets?
Yeah.
Okay, can you give me the meaning of intangible?
Okay, so intangible assets is like cash. You cannot see it, you cannot touch it, but tangible assets is equipment. You can physically see it.
Oh, yeah, right. Yeah, absolutely right. Intangible assets are assets that you cannot see. The example of one I can give you also. We have a goodwill. It's an intangible asset. And tangible assets, assets that you can see. They are physical, you can see, like buildings,
Yeah.
like a furniture, like a computer. Those are intangible assets. Because the question maybe sometimes they can ask you to classify between the intangible and intangible assets, tangible and intangible assets. So now those are examples that are for assets. Maybe I can just also mention the other one here in the example, which is very serious, which is very important. We have also a trade receivables. Receivables, let me just say trade receivables. Trade receivables. So those are all these examples. If you can remember them, they are example of assets. So you're gonna need them. So the other thing that I'm gonna add with this equation here with accounting, remember that every time you always have two accounts. Ne?
Yeah.
Two accounts. So when we say you always have two accounts, the reason part I started with a BAA equation is because what in those two accounts, it must always balance. So when you add up, if that's why we have assets equals to equity plus liability. So what happens to this side must be also equals to this side. So, but it does not necessarily that sometimes it can affect here and here only. So when it adds up, it must add up to 0. Or what if this side, it must be equals to the other side. So you're gonna see that when we are dealing, when we are doing with maybe this exact equation. So now let's go to the equity, the examples of the equity. So the examples of equity, we have the examples of equity. We have a capital, we can call it a capital, or we can call it a shareholders equity. For equity, there are examples. The first one, we can talk about the capital, which is the shareholders equity. Then we can also talk about the income. Income, yeah, equity, also they fall under equity. And we can also talk about the expense. Expense, expense,
Expense is equity or expense is liability? I'm confused about that.
expenses. Remember, the expenses, there are two types of expenses. No?
Mm.
Expense of expenses, you cannot be alone. Sometimes you can buy something which is expensive in terms of loan, which can fall under liability and fall under equity. So those are two things, and there are many types, different types of expense. So, expense because it's getting out of the company, it affects the equity.
Oh, okay. Okay, I understand. Yeah.
But the high company, when you say something, if, for example, if you are having a company whereby you are renting a place for your equity, then when you pay your rent, that's an expense for the business.
Okay, so basically, an expense is an equity issue. Unless you do not pay it off immediately, then it becomes a liability. Okay.
So after that, when we have expense, those are these two. Actually, I gave you the capital and then income and expense. And I'm also going to add one more. The other one more that I'll add is drawing. Drawing. So also drawing will fall under equity separately. So
Yeah.
every time capital or shareholders equity, income and expense and drawing, remember, they fall under the equity. So let's go to liability. Or so in liability, the first one I'm gonna give you, there's an example. The first one I'm gonna give you is a loan. And then the other one that I'm gonna give you in terms of loans, I'm still gonna go deeper a little bit. We have trade receivables, not trade payables. Remember, trade receivable is under assets, no?
Yeah.
We have trade payables, and then we have bank overdraft. This is bank overdraft, they are under the liability. When you have negative, like one of my account is over with negative with 50 rand, so that's a liability I'm owing them.
Okay. And what about trade receivables?
Trade receivable is a, something that a company is receiving.
So it's an asset.
Yes, it's under the asset. That's why if this is like, for example, if you went and invest money, and in that money you get an interest, and that interest is benefiting the business. So which means it falls under what receivable? It's a receivable, trade receivable. So it's something that the company is benefiting from or is having. It's the money of the company or is yeah.
Okay.
So payable is something that the company is paying.
Yeah.
Which
And
means
they have, with regards to assets, is a non-current asset and a current asset. So there's a big difference between tangible assets and intangible assets and non-current assets and current assets.
okay, with non-current assets, the difference between there is a current assets,
Yeah.
and then assets and non-current assets. So the only difference there between the non-current assets are assets that like they can be like they kind of like physical actually,
Yeah.
which are also like buildings and then equipment like that. And the non-current assets are things like cash, whereby also trade receivables and no banks and cash, and then also trade receivables, they fall under current assets,
Oh,
non-current assets.
I
And then
understand.
also, there is an example that I didn't give you also. We also have inventory or stock. Stock is under current assets.
Okay. Inventory. Yeah.
Difference, there is so much difference between the intangible assets and tangible assets.
Okay.
Which means the intangible assets they are under and the tangible assets under current.
Okay.
And then we also have creditors like this one for bank payables. is taken as control. And we also have bank overdraft. I think I already gave you, I didn't give you. This one, yeah, I was writing bank overdraft. Bank overdraft. So the bank overdraft is also fall under liability. So in liability, in something, we have a long-term liability, we have a long-term liability.
Okay, I know what's this one. Long-term liabilities is liabilities that last for more than 12 months. And short-term liabilities is where you can pay your liabilities within 6 months.
Yeah. So things that you can this is a loan that you're going to pay within 6 months. Remember, it falls under short-term liabilities, and then like that, exactly how you answered it is perfect. Very perfect. So which means I won't have much problems when it's working with accounting. So as I've already told you that each and every transactions in this one, it falls under two accounts. So now I want to give you a question. Remember, we are applying this question that we are talking about now. If the owner, I just want you to answer me this question. If the invest, let me say you invest in a business, by depositing let's say 10 10,000 cash. So now in terms of this equation, where does this 10,000 cash based on the equation of accounting? How are you going to solve it? Where are you going when it comes to when you are recording your transactions in the accounting equation? Where are you going to record it?
Which one? The owner invests the business by depositing 10,000 cash. This is owner, it will be equity. Equity and assets.
Okay.
Equity and assets. Assets will increase and equity will increase as well.
Yeah, right. Then in terms of assets and equity plus liability, which means here there will be positive 10K. I will just write 10K. And there was also the increase of that. So yeah, right.
Okay.
We don't have much problem with the okay. So answer me this one. If we wrote an inventory stock, no?
Yeah.
Stock, uh, which is 1,000. In the equation now, are you going to record it?
Okay. They brought a stock, bought a stock by check 100,000. Okay, so by check account, that means assets will increase because it's inventory, and what stock. I'm gonna say maybe uh bought by check. So equity will be decreased.
No, it's wrong.
It's wrong.
But
Okay.
what will happen? Because we are buying a stock, okay?
Right.
We expect check is the same as like money, cash or a bank. So
Yeah.
based on the equation of accounting, the asset is going to increase by inventory by 1,000, and
Okay.
the bank is going to decrease because you are taking out the money when you are buying it. You are taking out the money from your bank, which is also under the asset. So it's going to decrease by 1,000,
I
which
see.
on the stock, and it will decrease on your on bank, because we are using money to buy that stock.
Okay, because bank is under assets.
It is there, it's like on the other side, from equity plus equity.
Okay.
So in terms of materiality, you can see that when we take out money, it's like when I take out money to buy something, my bank is going to decrease, but I'm going to have a property of something that what I was buying. So in terms of the goods, I'm gonna be having something. I don't know. Those are the questions that you must also take into account, but I don't think you're gonna have a problem with that.
No, I won't. I'll remember it now.
But that would say a little bit of, I'm gonna give you again a very simple one again. Maybe you will get it correct. So if you bought a stationery by check, check for 150, bought a stationery by check for 150, what is it going to happen there when you buy a stationery by 150 in the accounting present?
Stationery will be uh it's not equipment, it's not inventory. Stationery. Okay. Is it the same as buying stock? Because it's under equipment, so I think assets will increase and decrease.
Assets will increase and decrease. No.
No, okay. I'm confused with this one. What happens?
This is, uh, but in terms of that we talk about the expense.
So it will affect equity.
So
So
you
equity,
answer,
yeah.
you must down everything based on what do you know about the so you find that also there is expense, there is also capital or shareholder equity and going. No?
Okay.
So stationary, they fall under equity. So which
Yeah.
means your equity is going to decrease because you are buying. The equity will decrease by what? 150. But
Yeah.
your bank also, in terms of another step, your bank in terms of assets, is also going to decrease by 150 because you are taking out money, you are taking money out of the bank
Yeah.
and buy a stationery. Stationery is under the drawing.
Oh, stationery is under drawings.
The stationery is under the. You can take that, or you can Google that. You will find the answer. Hello.
Okay, so when I googled it, it says stationery is under inventory. Yeah, so I don't really know because it says here stationery is under inventory. Mm, hello?
Yeah, I was still listening to you.
Oh, okay. Yeah, so they said that stationery falls under inventory because it's a trade, it's a consumable stores.
Yeah, okay. Sorry, I am the one who made a mistake, you know.
Yeah.
Not supposed to use instead of this word here. So stationary is also kind of like a stock, you know? But if you go deeper, when you are taking it, it fall under the expense. So why
Okay.
you record it the asset, you're gonna record it in terms of assets at the bank, and you also gonna record it in terms of not growing, in terms of the expense.
Okay, so the
When
assets will decrease and the equity will decrease.
they ask you, the equity will decrease when you buy the assets, and also the bank under
Okay.
the. If you maybe if you, I'm gonna try to give you maybe some examples where I can like assets. If you keep working with accounting, you will see that asset. Sorry, man, you will see that as stationary. They record it under the equity. But when you record it, the money that there is a money that is getting decreased from the equity.
Okay.
But when you check it also, it tends to also when you Google, it will tell you that it's a stock. So that
Okay.
these are simple questions that
Um, can you give me another example?
the other one, let me try to think. Okay. Let me say owner drew, but this one I think is gonna be simple, the one I'm gonna tell you now. Okay, let's say the owner drew a business check of 2,000 for which where do you think is going to fall?
Um, okay, so drawings. This is drawings. That's not good.
What do you think is the important accounting?
So equity is going to decrease.
It is going to decrease, okay, by 2,000, right?
Right. It's going to decrease by 2,000. And bank, I think, in assets is also going to decrease.
So that's it. That's the correct one. We got it right.
Okay, so that's correct.
Yes, that's
Oh,
correct. So the interest is going to decrease by 2,000 and also the bank will decrease by 2,000. Actually, 2,000 is for drawings. That's why I gave you that one.
okay.
So the tenant paid the monthly rental to the company.
Yeah.
They paid 1,000. What is going to happen?
So if they paid rent, that will be an income. Equity is going to increase, and bank is also going to increase under assets.
That's wrong.
Okay, so
So
rent.
the bank is going to, and then it is gonna also be
Okay.
out.
Okay, so I have a exercise in my book that I'm going to do, and then maybe I will do it, and then tomorrow you can check it and we can go through the adjustments for the one in the book.
You can take you can tell me which page, because you sent me a book, right?
Yeah, same book I'm using. I want to know
Oh,
everything that's in this book.
all right. So maybe I can just give you the last one. Eh?
Yeah.
If the ticket example was to 20,000, the business, where do you think it can help? The owner contributed a vehicle worth 20,000.
The owner contributed 20,000.
Yes. No, the owner contributed a vehicle worth 20,000. Yes.
I can't hear you very well.
But let me repeat again. The owner contributed a vehicle worth 20,000 to the business. Let me just write it down.
Okay. Okay, I got the question. So the owner contributed a vehicle worth 20,000. That means assets is going to increase and equity is also going to increase, I think.
Okay, in the asset, what is saving and
Okay. Assets, the vehicles are going to increase.
hello?
Can you hear me? Hello?
Yes, yes. You say,
The assets is going to increase because vehicles is under assets, so assets is going to increase.
okay.
And then owners' equity, I think, will decrease.
In the equity is going to increase, as you said, is true, but the equity is going to increase the capital.
Oh, so increase capital. Okay. So both equity and assets are going to increase.
Yes, both of them, equity and the assets, they are going to increase. So the vehicle will increase by 20,000, and the capital under equity is going to increase by 20,000. So which means you guys gonna tell me also which exercise did I help you with more.
Yeah. Yeah, I got an exercise that I'm going to do. It's based on the BAE system. And then once I do it, I'm going to show it to you. And then you can teach me the adjustments if I got anything wrong.
All right, no problem.
Okay, thank you. Same time tomorrow?
Okay, yeah, 9 p.m.
Yeah. Okay, thank you so much.